When it comes to buying a home, most buyers have to borrow money. Not all loans are created equally. So let's dig deeper into the 3 types of loans. First and easiest to obtain is an FHA loan.
What's a loan?
FHA stands for Federal Housing Authority, and those type of loans are insured by the FHA. FHA loans have looser guidelines for qualification and tighter restrictions on housing conditions. Borrower can have lower credit scores and higher debt-to-income ratios of up to 43% of their annual income. FHA borrowers can borrow approximately $270,000 or less. One of the negatives of FHA loans are you have to pay a mortgage insurance premium up front when you close on the loan. Another thing about FHA homes, they have to qualify under certain condition guidelines. Some of the things include no broken windows, no failing foundations, no poor roofs. You have to have egress/ingress on your windows and doors, meaning they open and close. FHA loans are better for those that don't have a lot of money saved up for a down payment and might not necessarily have squeaky clean credit. The second type of loan is a VA loan.
VA, is that like very awesome loan? I want that one.
Good guess, but VA is a Veterans Affairs loan. Past and present military service members qualify for these loans based on allowances. The best thing about VA loans is most of the time the buyer comes to the table with no down payment. In addition, the interest rates are the lowest out of any loan out there. One of the negatives of a VA loan is you have to pay a VA funding fee at closing. VA is similar to FHA in the condition of the home has to follow very strict guidelines to make sure that our military members, past and present, are getting an awesome home. VA members, thank you so much for your service. Thank you. A third type of loan is the conventional loan.
Do I have to go to the convention to get that one?
Conventional loans are more suited for buyers who are financially established. Some of the reasons being you have to have higher credit scores. Another thing is your debt to income ratio is lower at 38% versus the FHA 43%. The max amount of money you can borrow with a conventional loan is up to $450,000 before it turns into a jumbo loan. The negatives to a conventional loan is the requirements of a down payment are 20%. If you don't have 20% down, they will let you borrow with 5% down, but you'll have to pay private mortgage insurance on top of your principal and interest. If you do get a conventional loan with 5% down, once your equity rate reaches 20% or more, you don't have to pay the private mortgage insurance. The great thing about conventional loans are you don't have any insurance fees tacked on up front. The other great thing about conventional loans is the pool of available houses might be a little more broad.
I feel like you've taught me so much in such a short amount of time. I do have one more question though. So what are your thoughts on the trajectory increase of interest rates by the Federal Reserve based on the unsettling international stock and oil markets caused by socialist powerhouses like China?